Welcome, dear traders. Yesterday, several central banks raised the benchmark rate. The Bank of Canada and Korea have tightened the policies for the first time in 20 years. They decided to hike the rate by 50 basis points at once. The Fed has already increased its interest rate. It also plans to undertake more rate hikes. The Reserve Bank of Australia postponed monetary policy tightening because of the upcoming federal election, so the general trend for hiking rates makes Japan somehow unique. How did these rate increases impact markets? Watch our video review and find out. Wall Street closed Wednesday straight in the black, with all major stock indexes rising higher. This growth is rather puzzling amid rising inflation. Besides, the producer price index reached a new all-time high in March. However, investors realize that high inflation may persist in the long term. At the same time, the earnings season has kicked off. The market leaders are about to publish their quarterly reports. It's a high time to hedge inflationary and geopolitical risks by adding the shares of profitable companies to the portfolio. The first batch of the earnings reports turned out to be better than expected. That was why the equity market soared. Despite the current optimism, inflation is not going anywhere. Today, fresh inflation data from the US is on top, namely the producer price index. If the reading exceeds the forecast figure, then the market may repeat Tuesday's scenario. On that day, stocks were gripped by volatility. US Treasuries jumped to multi-year highs, and the US dollar reached new peaks. On Wednesday, the US dollar slowed down its rally and dropped slightly. It retreated from an almost two-year high of 100.50 and 99.85. There are several reasons for the decline against the basket of six main rivals, yet they are quite insignificant. To start with, the greenback weakened following a fall in the bond market. Analysts say that the government bonds seem to take a break before the further rise, like inflation. The rally is likely to last for a long time. What's more, the euro is again in momentum ahead of the ECB meeting. Inflation in the eurozone approached the record high of 7.5%. Moreover, the French election, the conflict in Ukraine, and soaring commodity prices are weighing on the economy. The question is whether the watchdog will decide to tighten monetary policy. Analysts also expect the continuation of the downward movement for the euro-dollar pair. Even despite yesterday's slight retreat, the US currency held at historically high levels. At the moment of making material for this video, it was trading at 99.65, and in the Asian session it was consolidating around 99.57. Even such an outsider like the yen was able to recover. It bounced off a 20-year low reached the day before. However, FX strategists believe that the yen is likely to stay in the downward channel, although the weak yen is beneficial for the Japanese economy and the Bank of Japan stubbornly maintains ultra-loose monetary policy. The situation looks less and less optimistic. According to recent surveys, more than 75% of Japanese firms believe that the current yen rate is damaging their businesses, and almost 50% expect profits to fall. To this end, the widening rate gap between Japan and the United States may undermine the Japanese economy as well. Apart from that, Japan's trade deficit also makes the yen a less attractive asset. Yesterday, the yen was able to add gains amid a drop in the US Treasuries. It returned to a 20-year low of 126.31, and after strong volatility and short-lived bullish momentum, the yen retreated to its previous levels. So it had no chance against a strong US dollar. Now neither traders nor analysts are betting on a rally in the yen. Thus, the yen is sure to remain weak in the long term. At the moment of preparing material for this video, the dollar-yen pair reached 125.35, and it's likely to move in the daily range of 125.07 and 125.69. The bearish sentiment may persist not only in the Asian session, but also during the whole day. The Aussie did not stand aside. It took advantage of the greenback's drop as well. At first, everything went well. However, it had to retreat eventually. Risk appetite rose, but speculators preferred shares of energy and mining companies. The Australian currency rapidly slipped again to 0.7400, and today it was able to grow slightly. At the time of preparing material for this video, it was trading at 0.7449. In the Asian session, the AUD-USD pair was consolidating in the bearish channel near the support level of 0.7441 and the resistance level of 0.7471. And that's all for now. Tomorrow, trading floors in Asia, including Hong Kong, Singapore and Australia, will be closed on Easter Friday. European and the US markets will be closed for the same reason. Do not miss our next video review and see you soon.